Hello and good morning. So today I just want to go through the trades that I took this week, whether the rules were followed and what maybe we can learn from it. So I'll just get into it. Let's get started with the Euro USD. We are going to analyze Euro USD, USD DXY, and GBP USD. So let us get started with the Euro USD. So here in our weekly, let me go to the weekly first, and then so on our weekly I had analyzed this on a previous video. So on the weekly I was looking for bearish setups, and as you can see I clearly marked the prior week high and prior week low. I'm looking for bearish setups. So on the daily, on Monday, when was Monday? This was Monday. So on Monday we finished creating this fair value this fair value gap. We made this fair value gap, and on Tuesday we started seeing some mitigation happening. So when Tuesday started mitigating our fair value gap, all I was just looking at is market structure shift in the 1 hour and then an entry. That's it. So I marked out the most important day of the week is Monday, so that you can know exactly where you are, the buy side liquidity and the sell side, where are we in the week. Because remember, if we are looking for bearish, we are looking for power, like power of 3. Let me see if I can draw this. I can just use this. Open like this, like this. Yes, something like this. We open here, we rally up. If we are going down here, we open, this is our open, we rally up, and then make our, this is the manipulation. That's why you mark the open on Monday and look at what was our buy side and sell side liquidity, and then are we going to manipulate higher, and then we go down, and then the price closes around here. Okay, so we just get rid of that. So that is why the what is not happening. I don't know what has happened. And just let me just change. I think I can get rid of this now. Yeah. So that is essentially the point for Monday. Monday, it just creates the, where are we going to manipulate from. Okay, so I was expecting a manipulation of the buy side liquidity, and then when it forms a market structure shift on the 1 hour, I was in. So yeah, this was Monday. Okay, Monday we formed this, which was our beginning of our fair value gap, and then yes, we formed this, we mitigated the fair value gap here. Remember, this buy side is the lower side of the fair value gap that we had formed. So we mitigated this on Tuesday, and then on the same Tuesday we made a market structure shift here. Let me show you here. I even a change in a week, I consider a week in the higher time frames as indication of the market structure shift. So this was our market structure, and then this was our fair value gap. Here there was a tiny fair value gap around here, that one. So here, what I did, so my entry would have been here on this fair value gap, stop loss there, target around here, sell side liquidity or something. But when I came into the market, I saw that this is quite a huge, it's not worth it. Like the RR was not giving what it's supposed to give, because I am, in my analysis, I tend to look for a 1:4. Normally it gives me a clear 1:4, and the 1:4 is supposed to be within my ranges. So this line shouldn't come above, like below this. I shouldn't be targeting like this. The 1:4 shouldn't be like this outside my zones. Okay, so I figured this is just I figured maybe if I reduce the risk and put my stop loss here on this candle, the risk is going to be 1:4. It's going to give me a 1:4 without straining. And as you can see, it came, wicked me out, and then continued. And so it got me thinking, should I have just placed it on top of the candle that made the market structure shift? No, the fair value gap? Or, like, I just learned that you should always put your stop losses at a swing high or a swing low. And if the trade doesn't make sense, maybe get out of it or just leave it alone, like skip the trade, you see? Because let me see if, okay, you see, it wouldn't have come, okay, maybe this, but this one wouldn't make any sense for me as well, because the RR would still be a bit, you know, it wouldn't have made sense to me still, even though the RR is quite good. Anyway, I just learned that maybe either look at the stop loss, and if it doesn't make sense to you, maybe pass that trade and look for another one. You see, so this one ended up being a loss, but the direction of the market was solid. It was good. And then the other thing, I saw a 45 minutes fair value gap. Where was it? I think when it took me out, I saw this fair value gap here on the 45 minutes. So at that time I was wondering, should I re-enter here? Because this would have made so much sense. I saw this when it took me out here. Immediately I thought of this fair value gap. I had seen it earlier. So I was wondering, should I just, you know, enter from here? Which would have made a lot of sense, because my analysis was still, my bias was still legit, you know. And you see, it would have given me a lot more than, it would have easily given me a 1:4, easily. Actually, during that, you see, it would have given me, because my target is 1:4, it would have easily given me a 1:4. Yeah, but anyway, so just looking at the, yeah, you see, it would have given me a 1:4 very easily. So I just learned that maybe if the stop loss is too big for you, maybe leave the trade, or maybe look for a stop loss that makes sense, you see. Because if I would have looked at this, I would have seen this one, and maybe it would have made more sense to me. Yeah, so I think I need to write on my rules that a stop loss must and shall always be at a swing high or a swing low. That's it. There's no compromising about the end of a fair value gap and stuff like that. If not, just leave the trade. So that was the first trade. This one I saw it and I was just out of it at that time. The second trade I took was yesterday. So on Wednesday we were still making lower lows. We made this, and entering yesterday, because I was still seeing many fair value gaps, like there were a few entries here and there, but because there was also this one, you would have put a swing here. This one, I saw this one also. I don't want to draw. I want the curve. Is it this one? This is a swing. I don't think it's this one. Let me look for I'm looking for the one that has a curve or a circle. I don't know where it is. Let me just give me a minute. It's not a circle. I think this one. Yes. So this one here, I saw this swing here. I saw this one. So this would have been also another very good entry. Like when the market, when you know the bias of the market, when it makes those structures, you should just enter, But now this one, this one also gave me a 2. And I was like, no, I can't take a 2. It's too risky. And I don't feel like it's worth the risk, because I think I've already made up my mind to 1:4. But you see, now it's making me lose so many opportunities. But anyway, so I skipped that one. And after skipping that one, I saw another trade here. On Thursday, I saw it make this fair value gap here. So at this point, it's just continuation. And after it made that fair value gap, I think I came to the 15 minutes and I entered here. I entered on that fair value gap, 1 hour fair value gap, but I trimmed my risk, because at this point I was saying, no, do I really have to I'm missing so many opportunities and I need to get in. Like it's Thursday and I need to get my trade of the week, And I entered off of that, and here there were many fair value gaps. So I assumed that there is no way it's going to come and take all these fair value gaps. Like, it made them for a reason, and it's not going to actually mitigate everything. So yesterday, so that's when I think, yes, it was something like this. I think I entered off somewhere here, because it was giving me a 1:4 from the sell side liquidity. So I entered somewhere here. Yes, somewhere there. So, and then I left my trade. As you can see, it came missed with a pip. Yeah. And then reversed. Sorry. And then reversed. 1 minute I was seeing it here. The next I was seeing here. I don't even know how that happened. This was 3 pips. And that was it for me. So the direction was right, everything was right. But I think the target and the timing were off. So that was that. And now we made a market structure shift. So we are currently bullish, and so there's not really a way to trade today, unless it goes below this and makes a fair value gap. Now you can enter. So that was it. So here I don't know what lesson this is, but there's one lesson that keeps on recurring, that when you're trading with the 15-minute value levels, you should always get out in time, like at 12. Yeah, at 12 you just get out or trail your stop loss if you want to maximize on there, because you see you would have gotten at least 1:2, which would have been fair. But all in all, we live to fight another day. So today we can see we are still buying bullish. So if it comes below this with a fair value gap, I think you can sell, but I won't be getting in today. GBP USD, we were also selling. I was looking for sales as well. These are my targets and everything. Oh. On Monday, we also created a fair value gap. Excuse me. We also created where's Monday? We also created the fair value gap. It's a bit similar. Let's say it's more similar. So we created this fair value gap on Tuesday. I was expecting it to take buy side and then make a market structure shift, and then I can enter. So we go to the 1 hour on Monday. 1 hour on Monday, we created this fair value gap here, and then the daily fair value gap. This is the end of the fair value gap. Tuesday we mitigated it, but now on Tuesday there was no market structure shift. Like where is our swing low? This one here, and it was not even giving fair value gap, so that was invalid in the first place. That was totally invalid. And then this one, now on Wednesday, the market was not also giving us the clear market structure and fair value gap until here. So I saw this, and this could have been one of the entries. This is a swing high, and my target was sell side, and you see it's still not giving me a 1:4, and so I just discredit. Like I feel like if I'm trading the 1 hour, I should, because of the time that when your stop loss is bigger, you will have to wait longer. So that's why I was discrediting all these trades, because like it was just not worth it for me with the levels that I have. But that would have been one entry, and then this was another one. Now when it made this, I knew the structure had shifted, and then it made this fair value gap, and I knew for sure market structure has shifted. So I was waiting for it to mitigate this, but on the 1 hour it didn't mitigate. So but on the, I think 45 minutes, yeah, it had mitigated that fair value gap. So I knew we might not come back to that fair value gap. And then I think I went to the 15 minutes, or where was it? I went to the, yes, because I knew if the 45 minutes have already been mitigated, and the 1 hour is not really showing interest to mitigate this fair value gap, and then the 15 minutes formed this tiny fair value gap here. this one, and that was my entry. Yeah, stop loss on that swing. TP, I had, it was a 1:4 until somewhere here. So you see it came, it started doing all these things that it was doing, and then it started forming fair value gaps here. So I was very confident. But now again, I forgot. Another thing I forgot is that once your entry is on 15 minutes, you switch from being a swing trader or a trader who waits for days and start working with time. When you're working with the 15 minutes, always look at the time. 15 minutes must be paired with sessions, with time and stuff like that. So at this point, because my entry was on the 15 minutes, I should have exited at either 10, yeah, 10 or 12, just before the PM session, because you see the PM session, when you're working with the 15 minutes, it doesn't cover a lot, and it doesn't give you, there's no space, there's no time to breathe, you can't wait hours. Like, you can't even wait overnight. You shouldn't wait overnight, because the market will always reverse. Most times than not, it always reverses. So this should have been the exit, because we were working on the 15 minutes time. But I left my laptop and this was the result. I stepped out and this was the result. I think I traded a 1 hour strategy. No, I traded a 15-minute strategy with a 1 hour mindset. And that was the problem here. So we can look into that next week. So today we are very bullish on the 1 hour. We made this fair value gap, but there was no market structure, so it's invalid. So we just wait for the PM session and see how the market is going to behave. Okay. Other than that, I think that's it for this video. See you in the next one.